There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone. Today's radio show, we're going to expand on the topic of the market participant group. We're going to start talking about how to use this information when you're trading stocks. A lot of people want to trade stocks short-term, swing position, day trading, to make extra income or to boost their capital reserves for their retirement. And it's very important to understand that the stock market has a cycle. It's not a 4-year cycle or an 8-year cycle. It cycles dependent upon many, many factors. They can average that cycle and come up with a 4-year cycle, but in reality, it's very, very different, and it often can extend and expand way beyond the normal cycle ranges. So understanding cycles is a complete training methodology all of its own. What we want to do is focus on understanding stock charts, technical analysis, and what you need to be studying to get in with the correct market participant groups to yield the highest return for your investments, your trading, and the time that you spend. A lot of short-term traders, retail traders is what we call them, spend an enormous amount of time trying to figure this out by themselves. They're called do-it-yourselfers, do-it-yourselfer retail traders. And they're trying to figure it out by themselves. They think if they read an article here or try a strategy there, or go to a few seminars that charting software companies put on all the time to promote their software, what they're trying to do is show you some little hot new tricks, and then you will renew your software or buy their software, and then they can make money. The same is true of the systems that are out there. There are many companies that claim they are training companies or educational companies, but what they really are is they're trying to promote and sell a trading system. And they make money every time you use their trading system. They make a lot of money from you. And brokers are also wanting to train you in a manner that will make them the most money possible. None of these groups of vendors are your buddies or your best friends. They are simply a company selling you a product or service, and you must treat them that way. And like you do anything, do your homework, research, and study to see what is right for you, and then use it. But don't listen to all the training gibberish, because a lot of what they teach is really old. Think about it. Right now, if your cell phone or smartphone is 3 years old, you consider it really ancient and that you need to buy a new one. Many people upgrade their phone every year to get the new gadgets, the new gimmicks, the new technologies, faster speed, more efficiency, ease of use. They're always being upgraded. But when it comes to investing or trading, retail traders tend to use 50 and 60 and 70-year-old strategies. Well, the market hasn't stayed the same. It's changed dramatically. 50 years ago, there were only 3 market participants. Now there are almost 10. We're at 9, but very soon there will be a 10th. And that makes a huge difference in how the structure of the market works and how the stock market trends work. And that's what we need to discuss and understand. It would seem logical that you would want to trade with the wisest, savviest, and the smartest of all of the traders or investors in the stock market. It would seem logical that you would want to be with them because they have more access to information, more experience, more knowledge, and understand the stock market in a way that would be very difficult for you to achieve in even 2 to 5 years. So following them makes sense, and they are the dark pools and the giant funds, mutual funds, and pension funds that currently control over $100 trillion in assets worldwide. They're very savvy and they know what they're doing. They are fundamentalists. There's a huge battle going on between technical analysts and fundamentalists. And lately that's kind of switched. It used to be the fundamentalists that were scoffing technical analysis in the early days in the 70s and 80s when technical analysis was first introduced seriously as a tool for finding stocks and evaluating stocks. Fundamentalists said, well, that's just a crystal ball, that's silly, there is no value to it, you're just guessing, because a lot of times in those days the technical analysts were trying to predict the market. You cannot predict human behavior precisely. You can have an expectation or an anticipation, but you can never predict human nature. And even though the market is fully automated, at about 80% all orders are automated, there is ample room for human emotions and human intervention and thinking, because they're the ones that place the orders. The computers cannot place the orders. The humans place the orders either with a controlled bracketed order that incrementally buys the stock, or because they make the decision to buy the stock because they're a floor trader or a retail trader or a small lot investor. So there's still human interaction, and the stock market is ruled by human emotions. When the stock market is going up, everybody wants to get in because they want to make a lot of money. When the stock market's going down, everybody's terrified and they're trying to sell because they're losing money. These are human emotions, and even with the automated market, there is still that factor involved. The fundamentalists look at the company. They evaluate the company and they determine whether the company has projected growth and is on the right path to have more revenues and more earnings, which would improve the dividends or the value of the stock for the investors and the shareholders, which are the trading public. Now, the fundamentals that the giant mutual funds and pension funds study are not the same as what you study. You study the earnings per share, price versus earnings, and so on and so forth like that. Very old style fundamentals, very rudimentary, and they are lagging indicators. And these are indicators, the P/E ratios, the EPS, the earnings reports, all come out 3 to 4 months after the actual events have occurred for the company. The giant mutual funds and pension funds get in earlier because they're on top of their companies every single day and week and month. They're paying attention to how the revenues are going all the time. They visit their companies, they check them out, they look over their financial statements for each month. They're not that far behind what is going on with the company right at that moment. They do walk-arounds where they check out the company to see how employees are behaving, how is production doing, is the manufacturing floor full to capacity. They can judge a lot of things, and they have done this all their lives, so they know what they're doing. You wait for the earnings report, and it's 4 months after the fact. So now the stock has already been moving up because the giant funds and pension funds know that this company is doing well, and they started buying into a bottom, creating the bottom, because they saw that there was a turnaround going on. And they started getting in as bargain hunters when the stock was still going down, and you and most retail traders and most retail investors were selling in capitulation because you're giving up because the stock is never going to improve. It's going down, down, down. You've lost 60 or 70 or 80% of your value, and you're giving up. Meanwhile, the bargain hunters, the giant dark pools, are buying, and they create the bottom with their incremental buying. So what technical analysis does is it isn't a crystal ball. It isn't a prediction of what's going to happen. It simply is the current activity that is occurring for that stock in volume and quantity, price, and time. And by studying these factors in a stock chart, you're able to see the dark pool activity when they start accumulating, when they start forming the bottom, and that tells you, oh, something has improved in the company. Something about the company is getting better. Even though this company has been in this huge long downtrend and has lost 80% of its value, right now, on this point in time in the last few weeks, the giant dark pools have determined that something good is happening and that stock is starting to base or bottom. That is what you need to learn in technical analysis. Most of you learn MACD moving crossovers, which is fine, but it's never going to make you consistently successful, and it's never going to make you a highly profitable trader who makes millions of dollars or hundreds of thousands of dollars or whatever your capital base is capable of making. You need to learn more about technical analysis, and you need to learn what I call relational technical analysis. Technical analysis was the start, the beginning of really evaluating price, time, and quantity in relation to who is buying. And that's what I teach. What you have learned, if you've taken technical analysis courses that are not TechniTrader, is the basics. You've learned candlestick, reversals, and continuation patterns. You've learned some MACD crossovers, maybe some stochastic, overbought, oversold signals, that type of thing. Those are absolutely the bare bones basics. Maybe you've learned how to put in a percentage stop loss, which you do not want to do because the HFTs calculate percentage stop losses and they'll snap you right out of that stock with a whipsaw. You have to be aware of all the market participant groups. That's why I talked about them first before we start talking about technical analysis and relational technical analysis. Technical analysis is the study of the stock charts, of candlesticks, and of indicators. And it's just a very basic, very, very basic concept that most people do mediocrely well. They make a little money, they lose some money, they make a little money, they lose some money. But they're so hooked on the fact that once in a while they really have a good trade that they keep doing it. And the retail brokers are just super happy to have them doing it, so they keep promoting more and more of these strategies where they make a little, lose a little, and they keep getting you all excited so you trade because the retail brokers make tons of money off of you. And the charting software companies, they want you to use their charting software, so they keep promoting strategies and they keep running seminars and so on to keep you continuing your subscription service so that you have the software. And charting software is very important. Using your broker charting software is a very bad idea. I know some of them have very pretty black background charts, but that is in their favor, not yours. What I teach that is completely different than what everybody else teaches is relational technical analysis. And what I mean by this is you look at the stock chart, you look at the indicators, the 5 essential indicators that we teach, and you say, based on the candlestick patterns, based on the indicator patterns, which of the market participants is controlling price right now? Because that is the key element that tells you who you're trading with. And if you understand who you're trading with and the patterns and footprints they create on the stock charts, you will always have a very good idea of how price will behave in the near term. It's not a prediction. It is understanding that this market participant group has this reason for buying this, is buying with this type of order, and is getting in for this particular reason. And by understanding the what, when, where, how, and why of price, time, and quantity on the stock charts, now you have a movie going on that you can watch and you can really see what's happening instead of just a black and white picture. Technical analysis is like a black and white picture. It's a still of something that happened. Relational analysis is telling you what's going on currently behind the scenes that can only be seen with the 5 essential indicators and the way that we teach candlestick patterns. They're not reversals and continuations. They're entry signals and specific points of reference regarding who is in control of price. Now, each different market participant group has different order types, different venues and routing, different lot sizes, different reasons for buying or selling that stock at that particular time, reasons, and also information. How pertinent and current is that information? The retail crowd has the most lagging of all the information. By the time the information gets to you and is reported on websites like Yahoo and MSN and so on, it's ancient as far as the professional side is concerned. They've moved on. They've made their decision months ago because they knew about it. You're 3 or 4 months behind all the time because you rely on retail news. Now, another factor that you have to be aware of is HFTs are predatory. Some of them are market makers, but most are maker takers still, and there are still plenty of them around. We've seen huge surges of spikes with the HFTs recently, and you need to be aware that they understand what you do. They know what you do, how you trade. So they're perusing all the social medias and all the little chat rooms and all the little postings of what retail traders are most interested in. Some programs show different size fonts for the interest of the retail trading crowd. Well, the HFT picks up on that and they can trade against you. So a lot of times when you have a whipsaw trade or a poor trade or you lose money in a trade, it's because you're trading against HFTs and you have no idea you're doing it. Or you're trading against pros and you have no idea you're doing it. Or you're trading against dark pools and you have no idea you're doing it. It's all there in the stock charts, but you have to go beyond the simple basics of technical analysis and really use the relational technical analysis relating to who is controlling price. Sometimes the retail trader and retail investor are controlling price. They're buying it and it's running up speculatively in an angle of ascent that's unsustainable at nearly 80 or 90 degrees. And that is something you need to understand because they run out of money very quickly, whereas the professionals have extremely deep levels of capital reserves and liquidity that they can tap into should they want to continue to buy a stock. So there's a lot of variables going on in a stock chart that you have yet to learn. Sure, you know candlesticks, great. And you know trend lines, wonderful. And you know trends, and that's wonderful, but you don't know trend line patterns. And you know about moving averages and stochastics and MACD. You may know a little bit about volume. You may know a little bit about RSI. But those, even if you've been trading for 20 years, those are really the basics, and you need to have learned more. You need to have more understanding of what's going on rather than a superficial understanding of, oh, that's engulfing white, so I can buy and I'm going to make lots of money. Well, who created that engulfing white? Is there enough energy behind it to keep the run going? Where is the resistance level? Who is selling right now? Who's buying right now? All those factor into the success of that engulfing white or that morning star or that hammer pattern or whatever you're using. And a lot of those signals are simply reversals or continuation patterns. They're not buy entry signals or sell short entry signals. And that is very important. Can you tell the difference between a buy to cover, a bargain hunter, and a buy on the dip candle pattern? We are in a little correction here. And can you tell the difference? Because if you can't tell the difference, you don't know who formed that little white candle after several big black candles formed downward. And if you can't tell who it is, you don't know what's going to happen next. But if you know what that candle is it a buy to cover, a professional trader? Is it a bargain hunter, dark pool? Is it a buy on the dip retail investor? If you know what that candle represents, then you understand who's in control of price at that time, and you'll know how price will behave in the near term. That's relational analysis, and it's the evolution of technical analysis. I presented my theories to MTA, and they were blown away. And ever since, more and more of the membership and people at MTA are using my concepts and advancing. Technical analysis on the professional side is endorsing and continuing to work with fundamentalists to incorporate more and more fundamental line indicators and more of the fundamental values into the stock charts, making it easier for you to evaluate a company not just on technicals, but also on graphical fundamentals, which is very, very exciting. This is the evolution of technical analysis. And you should be embracing it. You should be really excited about it because it gives you more information. The more information you have, the better the decision you're going to make. The more you understand what the chart is saying to you, the more successful you will be. Right now, a lot of you simply guess, and you have mediocre results. Oh, I made 10 cents on the stock, so I made $200 a day. Whoopie-doo-dah. That's not impressive. The professional side makes a lot of money trading stocks, and they do it because they understand who they're trading with and who they're trading against. They understand the market structure. They understand routing systems and all of that. The retail side is on the outside of the market, and they're mainly manipulated by their retail brokers. Your online retail brokers fill your orders, and they encourage you to use order types that are not to your benefit, and they encourage you to use stop losses which are not to your benefit, and they teach you outdated methodology. They're not your best friend, even though they pretend to be. They're in the business of making money. TechniTrader is only about education. We don't sell charting software. We don't sell trading systems. We don't have any of that stuff. We support some softwares because I feel that you should have the best tools to be successful. So what we do is we have templates and indicators and scans that you can put into your charting software that matches what we teach so that you can be more successful. Those come with the courses. They're just part of the course. And we also have an extensive support system. Students need support every step of the way. And there are different factors that come into play when you're learning. First, you have to learn by studying and accumulating the knowledge. Then you have to apply that knowledge with practicing on a simulator. And we're there every step of the way for you during that. Our courses are a complete methodology that teaches a complete trading process, from step one all the way through to the completion. And this makes our students far more successful. It isn't a strategy. It isn't a trading system. It isn't some get-rich-quick scheme. When you've exhausted yourself on these schemes, systems, and strategies and are fed up enough that you want to get a real education, then check us out and check out our courses, because what we do is completely different from everybody else. We have different levels for beginners, novices, intermediates, and advanced traders who've been trading for 20 or 30 years. And we cater each course to your needs, so we can customize it. We modularize it so we can customize it to fit each student's specific needs and where their holes are in their education. If you're a brand new beginner, save yourself a lot of time, 2 or 3 years of frustration, and a lot of money, and start right out with our courses, because you will be successful. My best students, my very best students who make the most money, are the ones who start out with us, are the beginners who don't know anything about the stock market and take our courses and start trading our methodology and our complete trading process. And they are very, very successful. I've had people as young as 11 up to the age of 96 take our courses, and they all have done extremely well. So check us out. I hope you learned a lot. There's a lot to understand about the stock market, and that will help you become the consistently successful trader you deserve to be. I'm Martha Stokes.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders. And certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.